guys, why don't you have a look at that there? The Nasdaq is up once again here today, and the stock market in general is up once again here today. Again, okay, S&P 500 up just a little bit, but it's up, okay? Nasdaq up 0.78%. At this point, do we have to just start assuming that the stock market goes up every day? Like, this is absolutely incredible. And look at the futures are up. I mean, I guess you can just expect the futures to always be up now or something like this. Like, this is absolutely incredible. Now, who knows where the market will trade at tomorrow. I just thought I'd bring that up to you guys because that's kind of funny, right? The market's up, today, futures are up, and it just seems like we're in this market. I mean, Nasdaq futures over 9,300. Just seems like we're in a market right now that is just uptrending and uptrending and uptrending, and it just won't quit. Let's pull up a one-year chart of the Nasdaq composite, and let me show you something here, okay? Obviously, the market, if you go back a year ago, it's trading a little over 7,500. It's like 7,600, somewhere around there, roughly 1 year ago, 12 months ago, right? And then it goes on a crazy run, right? A huge run. It climbs all the way to, I think it topped out right around 9,800 in terms of the Nasdaq. Rona hits, and obviously that freaks out the market in a major way. It drops. I think it bottoms out at around 6,600, if I recall. And since that time, it's basically just been up massively for the past about 2 months now. And now here today, we're trading at about 9,200. And if we saw Nasdaq futures, I believe they were trading over 9,300. And so, yeah, I mean, shoot, another 1 or 2 weeks of this action, we're going to be literally at all-time highs for the Nasdaq. Literally, if this trend continues for just 1 to 2 more weeks, we will be back at all-time highs for the Nasdaq. That is crazy. I mean, you just think about what has happened, and to be back at all-time highs possibly in a week or two if this trend continues, that's just unbelievable. It's not like it's just the Nasdaq's up, okay? The S&P 500 is now up 4.2% in the past 1 year. 4.2%. So it's not like the only thing that's up in the past 1 year is the Nasdaq. By the way, Nasdaq in the past 1 year, let's look at that. It's up over 20%. Over 20% gain in the past 12 months for the Nasdaq. Meanwhile, we have, I don't want to go through everything, but unemployment's sky high, GDP's worst ever. Corporate debt loads have been, increased dramatically pretty much across the board. Credit, facilities withdrawn, massive amounts of uncertainty in the overall economy, the business landscape. I mean, it's a bad situation. Plus the health side of things, which we don't know when Rona is going to get solved, because it's certainly not solved as of yet. I mean, things are getting worse and worse on those fronts, actually. And here we are, 1 year, the Nasdaq's up over 20%, okay? So what I want to talk about in the course of this video, we're going to talk about what's called FOMO. And if you do not know what FOMO is, that's the fear of missing out. And this was not a term that was ever talked about that much, to be completely honest, until Bitcoin really came around. There was a crypto boom. And then, once that boom happened, everybody was talking about FOMO. And now it's pretty common that this phrase is used if a stock continues to climb higher, or the markets in general. And, for today's video, we're talking about really the markets in general. And if there's FOMO driving this market, the fear of missing out, that you can miss out on a bunch of gains, or if something else is going on here, okay? So last video got 5,771 thumbs up. I think we can beat that record in this video, guys. Let's see if we can smash it, no pun intended, okay? So let's go ahead and look at a Nasdaq chart for the past 10 years, going back to about, right around 2010-ish. And when you just pull up a Nasdaq chart, just look at a 10-year Nasdaq chart, you're going to see that puppy just goes up and up and up. And the Nasdaq 10 years ago, you go back, it's under 2,000, right? And here today, 10 years later, trading at 9,100, 9,200, heck, tomorrow could be trading at 9,300 plus, right? That is a ridiculous amount of gains. Literally, if you just had your money in an instrument that basically followed what the Nasdaq does, you made crazy money the past decade, like crazy money. And, you could say, you make an argument that you didn't actually take that much risk if you just had your money diversified around like the Nasdaq 100 or something like that. That's incredible. I mean, incredible when you just look at that chart, okay? And so just looking at this chart of the Nasdaq, it can lead to FOMO. I mean, literally, you look at that chart and imagine you were on the sideline for the last 10 years. You didn't put a dime in the market, or you put very limited money in the market, right? Just looking at that can lead to a fear of missing out. Because you look at that and you say, what have I been doing the last 10 years? Why have I not, been heavily invested in the stock market? Look at the gains I could have had. Imagine what my wealth would be if I had, participated in it. And a lot of us that have been fortunate enough to have participated in this, someone like myself and a lot of you guys watching this video, Like most of us have done very, very well, and we're very thankful for that, right? But if you've been on the sideline, you're looking at that and you're like, dang, I missed some crazy gains and I want some of that money, right? I mean, you look at a stock we talk about more than any other, pull up a Tesla chart. You go back to 2011, 2012, 2013, Tesla's a stock that's trading at like 30, 40, 50 bucks a share back then, right? Here today in 2020 is trading over 800. You look at something like that and man, you start feeling the FOMO a little bit, right? It doesn't feel good to look at that chart if you didn't own a Tesla stock, anywhere along that ride, right? Amazon stock, you go back and look at Amazon stock, 2010, 2011, 2012, even into 2013, you could pick these shares up for 100 bucks, 200 bucks a share. It's $2,400 plus a share here today. I mean, imagine the gains. You look at that and it's just, you feel the FOMO if you didn't own that stock. You'd say, why did I not buy Amazon stock? Why was I not investing in that? Why did I not get those gains? NVIDIA, right? NVIDIA, it's a $15 to $30 stock for years and years. Basically from, 2010 to about 2015 into 2016, it's a $15 to $30 stock. And over the past 5 years, it's gone from there to over 300. It's $322 a share here today, okay? AMD, you want to see one of the Nasdaq poster childs of, feeling that FOMO go through your body, right? 2015, AMD's a $2 stock. It's $55 today. $55, and yeah, there was no reverse split with AMD. It's just straight up gone to $55 a share from $2 in 2015. And that's just some charts. I could have showed you a lot more, okay? And so at the end of the day, you just feel the FOMO. It goes through your spine when you look at those charts. And if you weren't investing, you didn't get a piece of any of those rides, really, you just feel it. You just feel it. You're like, oh, man. Imagine the money I could have if I just invested in some of these companies or the Nasdaq in general, right? And it's not just the retail investors that feel FOMO. Believe me on that, okay? Look at this. Hedge funds can't even keep up with the stock market. Most of these hedge funds trail the stock market considerably. The proof is there. The numbers don't lie. Like, look at the S&P 500 versus hedge funds. S&P 500 crushes hedge funds almost every single year. And so imagine you're a hedge fund, or imagine you're a client of a hedge fund. You're looking at this and you're like, you see a chart like that and you're like, gosh, why do I have my money with this hedge fund? I could literally just be in something that's mirroring the stock market and getting just as good of gains, right? Like just as good of gains, okay? Never mind that, if you're an individual stock picker and you're a good one, you actually do the work and you have the right strategy, the gains can be ridiculous. I mean, the S&P 500 is up, 4% in the past 1 year? The public account's up 32.85%. That was as of April 30th. The gains have actually gotten a lot better for us since then, okay? So you look at something like that and it's like, I'm no rocket scientist. I don't have a massive team that, gets me all this data, and I don't have a bunch of connections to executives and things like that. And yet I'm massively outperforming the stock market. This isn't even something that's close. And so to beat the stock market, it's not, I wouldn't say it's easy, but I also wouldn't say it's hard. I would not say it's easy, but I wouldn't say it's hard. We got a ton of people in the private group who beat the stock market consistently and are absolutely destroying it. You need 3 things to beat the market: strategy, work ethic, and discipline. You got those 3 things, you're good to go, okay? These hedge funds are desperate for the gains. Why are they desperate for gains? Because more and more of their clients are looking at charts like this and they're saying to themselves, why would I not just put my money in an S&P 500 index fund? Let's just assume for a moment that you don't want to individually stock pick. You don't want to read annual reports. You don't want to listen to conference calls. You don't want to do the work. Why not just put your money in something that mirrors S&P 500? And that's what every single person that's in, has money with a lot of these hedge funds is thinking to themselves over the past year or two. They're looking at this and they're like, I don't know why I'm doing this. And so the hedge funds, they're desperate for gains. They've got to get the gains, because if they don't pick things up, these clients will continue to leave them and they will continue to move their funds to index funds and things like that. And obviously the hedge fund industry, they don't want to lose all these clients. They've got to have some outperformance here. They can't just get destroyed by the S&P 500 every year. Because think about it, you're in an index fund, you're invested around the 500 biggest companies in America, the best companies in the world. that's a pretty safe strategy, and probably I would make an argument that's actually much safer than a hedge fund, and you're going to likely get way bigger gains. And then we have a lot of people that are starting that have a lot of money that are starting to take their money into their own control rather than, they used to put it with a hedge fund or something like that. We got 2,000 members in the stock group now. We have at least 25 members who are confirmed multimillionaire members. These are usually the hedge fund industry's clients, and they've decided, you know what? My hedge fund over here that I'm invested with consistently underperforms the market. Why the heck am I going to go with them? These are usually their clients. And these individuals that have money that are multimillionaires saying, I would rather pick stocks for myself than invest it with these guys, or I'd rather just put my money in an index fund than watch these hedge fund clowns, go and invest my money and not even be able to and get destroyed by the S&P 500. Just absolutely obliterated. So the fact is, FOMO is real. Big investors in some of these hedge funds are desperate for it, okay? And at the end of the day, here's the thing that happens, okay? We know FOMO is real. If the market continues to go higher and higher and higher, there will be more and more FOMO. And once again, it's not just from average Joe down the street, Pedro, who's investing $600. He's not moving the market, guys. It's these big funds with billions, tens of billions, or hundreds of billions. And don't call them smart money. Trust me on that. They are not smart money. They are some of the dumbest money in the stock market, literally. And the proof is in the pudding. Look at the numbers. The numbers don't lie once again. Just because you can raise $10 billion for your fund does not make you a great investor. There's a difference. Getting $10 billion in a fund is all about sales, not about gains. Remember that, okay? So all those big investors, yeah, as the market continues to go up, if it does, the FOMO will build and build and build and exacerbates the gains, right? Once again, the FOMO, the term really got super popular around the crypto times. That's all of a sudden everybody was starting to use FOMO. And if we look at Bitcoin, right? Bitcoin, if people start finding out about Bitcoin, the average people out there who weren't super up on the crypto markets. I remember I started kind of looking at, Bitcoin and whatnot right around, it was around 3K at that particular time. I'd started looking into it because I started reading some articles and people were like talking about Bitcoin and it was starting to, build a lot of hype. So there starts to be some awareness around it. Then, it hits 5K real quick and people are like, whoa, what the heck? We just missed out on a ton of gains. And the FOMO starts to build. And as it goes up and up and up, FOMO builds. And more people are like, gotta get in, gotta get in, gotta get in. Until finally the FOMO peaks. I think Bitcoin hit about 20K at that particular time. And, then it kind of fell from there. And so much FOMO had built during that time that there was a lot of hate. I mean, I remember I did a video, it was actually a really popular video, especially for those days for the channel, about, the possibility that a Bitcoin crash was coming in 2018. And I did that video probably a few weeks before, Bitcoin price topped out. And I got crazy amounts of FOMO hate on that. There were so many people that were just saying, no, you need to get in this. Look at the price, going back to the last price action. And there were so many people that were really legit delusional about what was going on with the Bitcoin price at that particular time and that what was going on was not sustainable. And ultimately, a few weeks after that video came out, the peak happened and then Bitcoin fell and fell and fell, okay? Now here today, Bitcoin's 8,500 versus, at the peak there was about 20,000. But the good news is for Bitcoin, there's no more FOMO in it anymore. Now the people that are invested in Bitcoin are people that actually believe in Bitcoin long term. And that's a healthy thing for a market. You never want to be in any asset market and feeling like you need to invest every penny because of FOMO, essentially, at the end of the day. The fear of missing out is not good, okay? So there's real FOMO in this market. Let's be very clear about it. And it's not just from the retail investors. Believe me on that. It's from the big guys. Believe me, the big guys are the ones that move the market. The ones that have, 10, 20, 30, 40, 50, $100 billion of assets under their management that they've raised over time, those are the guys that are controlling this market. Now, there's three other things that are also helping the stock market right now and making the stock market essentially go up and up and up and in this uptrend that, like I said, another week or two, if we get this type of price action, Nasdaq's going to be at all-time highs, and that's just crazy, right? One is the Fed backstop. The fact that the Fed is basically backstopping everything now has made a lot of people have a lot less fear. I mean, you have things like some of these companies aren't even allowed to go bankrupt, like a lot of the airline industry, right? In a normal situation, some of those players would have already gone under or would have went under. But now that the Fed's, basically stepped up and said, we're going to do this, do that, and the government in general stepped up, which, the government, where are they getting that money from? They're getting that money from the Fed, right? When that essentially happens, you have a lot of people that just get a lot less fearful. And they're like, why would this company go under? The Fed's probably just going to bail them out anyways. They're not going to let them go under, right? If somebody's looking at Boeing stock, Boeing's in a pretty ugly situation right now. But at the end of the day, people are going to look at Boeing stock. Some investors definitely are going to look at it and they're like, Boeing's not going out of business. The government won't let Boeing get out of business. No matter what, the Fed, the government in general, which are basically the same exact thing, they won't let that company go under, no matter what. And so you just have a lot less fear in the markets of a natural market where businesses actually go out of business and bankruptcies actually happen and things like that. The Fed backstopping everything, buying bonds, buying everything. It's just put a lot less fear, and it's honestly, at the end of the day, it's increased, asset prices quite considerably, okay? And never mind, there's a whole plunge protection team and all those sorts of things, right, we won't even get into. But the Fed backstopping things, big time. Number two, okay, big is getting bigger. What I mean by this, essentially, is some of the biggest companies in the world are getting much, much bigger during this time in terms of their market caps, which are helping the indexes even more go up faster and faster. For instance, there was something I posted on my Instagram yesterday, something I thought, 2 days ago, I thought that was really interesting. This shows you the FB, Amazon, Apple, Microsoft, and Google, right? And this shows you their market capitalization in the S&P 500, and it's like 20% plus now. So, they can literally move the S&P 500. Those 5 stocks can move the S&P 500 up or down very positively or very negatively just based upon their price action. And never mind that, the weights of some of those companies in the Nasdaq's even heavier. Let's go ahead and look at the components of the Nasdaq 100. Mr. Softy, Apple, Amazing's on, right? They make up like 32, 33% of the weight. Those 3 stocks alone. Those 3 stocks alone will move the market big, depending on if they go up or go down. And never mind that, you have the smaller companies, if you want to call them that, after that, right? If you add up, both of Google's businesses, they make up around 8% of the Nasdaq 100. So at the end of the day, these components are getting so big that those few companies are starting to really control the narrative of this market. And if the market's going up, a lot of times it's because of those companies going up. And if it's going down, a lot of times it's because those stocks specifically are going down, okay? It's the second reason why these markets continue to go up. The third reason why these markets are continuing to go up is hope. We're seeing a lot of hope out there, a lot of hope from investors that everything's going to be okay. And I will 100% say I hope everything is great. And I hope the unemployment drops, back down to 5-4% very quickly. And I hope corporate earnings jump back over the next year. I really do. I personally hope that happens. Is that the most realistic scenario? I'm not so sure. I think there's definitely a decent probability we could have an unemployment rate over 10% for 12 months or longer, which would be officially a depression. If you want to call it depression, it needs to be unemployment needs to be above 10% for 12 months. I think that's definitely a possibility. Who knows if it will happen, but it's at least a possibility. But the fact is, we got massive amounts of hope in this market right now. And when you have hope in a market, it's really hard to bring things down because, investors, between the FOMO and the Fed backstopping things, and you add on the hope that, hopefully things will get back to normal, these are the sorts of things that are basically causing a market melt up. And I think investors in the market in general should be much more cautious right now. I think people should be looking at this and saying, look, let's just see how things play out over the next 3, 6, 9 months. We're going to get company earnings in 3 months from now, and we're going to get a real clear picture of what's going on because all the economies worldwide are starting to open. And let's see what really is the truth here. Let's see if things do bounce back great. Maybe they do. Perfect. Okay, we can go from there. What if they don't? And that's a question I think not a lot of people are asking right now. They're just hoping that things are going to be great. And I just feel like at this moment, we should be more cautious and more like, let's look at the data, let's see where things are at, and let's go from there. Because the fact is, the Nasdaq's up 20% plus in the past 1 year. It's not like we're getting some massive discount on the Nasdaq. We're not. It's up 20% plus in the past 12 months. The S&P 500 is up 4% in the past 12 months. The fact is, we are not getting a massive discount in the stock market right now. And when you're not getting a massive discount in the market and you got unemployment rates, climbing to the sky and GDP is awful and all the bad things we could talk about for days and days, right? In a market like that, it's best to be a little more cautious. If Nasdaq's down 50% over the past 12 months, It's fine to deploy money. Boom, boom, boom. Get it out there. Get it out there. Let's ride on hope. If the S&P 500 is down 40, 30%, 40%, 50% in the past 12 months, let's get that money out there. Who cares? If things bounce back in 2 years, 3 years, who cares? Because the market's so cheap, right? We're not in that type of market. The numbers aren't lying here. So in this market, it's just like, be a little more cautious. But hey, there's a lot of FOMO out there. And if this market continues to climb, it just breeds more and more FOMO of a lot of these big funds feeling like, I got to get the money in, because they don't want to underperform their peers. And also, they need to step it up. They can't even keep up with the stock market. It's not even close, guys. So hope you enjoyed today's video. As always, let me know your opinion down there in that comment section. I enjoy reading through those. Smash the thumbs up if you enjoyed today's video. As always, thank you for watching and have a great day.